Turning to the active trader business requirement. As previously indicated, to qualify under Section 355, one must meet the requirements of Section 355A1. One of these requirements is Section 355A1C, which requires that the requirements of Section 355B be met, relating to the active conduct of trades or businesses. The thrust of Section 355B is that you must have two active trades or businesses after the division, and at least one of these active trades or businesses must be in the spun-off subsidiary, and at least one of the active trader businesses must be either with the parent, or if the parent ceases to exist, then with another separately spun-off subsidiary. To have an active trader business, a corporation can either actively conduct that trader business directly or be a member of something known as a separate affiliated group that conducts that trader business, a possibility we will look at later. The thrust of Section 355B was previously indicated. More specifically, 355B1 requires one of two conditions be met to satisfy Section 355. One possibility is Section 355B1A, in which the distributing parent and each controlled distributed corporation is engaged in the active conduct of a trader business immediately after the distribution. Now, this rule is designed for spin-offs and split-offs. Another possibility, Section 355B1B, is that immediately before the distribution, the parent had no assets other than controlled corporations. Each controlled corporation is distributed, and each controlled corporation is actively engaged in a trader business. This rule is designed for split-ups. You should also note that under the regs, the parent can have a de minimis amount of assets other than stock or securities in controlled corporations. So there's a little bit of leeway there under the regulations. Further note that this second possibility is not satisfied if a significant part of parent's assets includes stock or securities in a corporation which conducts a trader business, but that corporation was purchased within the last 5 years. Turning to Problem 11, Question 1A, as illustrated in this slide. A, an individual owns 100% of PICO. P has two categories of assets: a widget business, which it owns directly, and 100% ownership of ESCO, a subsidiary. S itself has a COG business. Assume that both businesses are active. P distributes all of its S stock to A. Does Section 355B apply to this transaction? 355B1A applies. The distributing company and the distributed controlled subsidiary both have active trades or businesses after the transaction. The other requirements of 355 are met, and so this would be a good 355 transaction. Question 1B. Suppose instead that P had two assets, 100% of the stock of S and 100% of the stock of T. S has the same COG business as in 1A. T owns the widget business. P liquidates and distributes the stock of its two subsidiaries to A. How would this change your answer? Well, again, note this is illustrated in a diagram on the slide. Here, Section 355B1B applies. P had no assets other than stock or securities in controlled subs, which each actively conduct a trader business afterwards, and P distributes all the stock of the subsidiaries to Sandy. And so again, at least on the face of it, this appears to be a good 355 transaction. Question 1C. Same as B, except that P does not liquidate. Instead, P distributes only the stock of S. How would this change your answer? Well, first note Section 355B1B does not apply. Why not? Well, P had no assets other than stock and controlled corporations, but this stock must be distributed in order to satisfy B1B. But note that Section 355B1A is satisfied. S, the distributed corporation actively conducts a trade or business. Does P actively conduct a trade or business after the distribution? Because in order for B1A to be satisfied, P must actively conduct a trade or business immediately after the distribution. Well, directly, it does not actively conduct a trade or business. But can P be deemed to satisfy the requirement of conducting a trade or business by indirectly conducting a trade or business through subsidiaries? Well, the code does allow for that possibility. The manner of determining whether P indirectly conducts a trade or business has changed not too long ago. The test used to be whether substantially all of its assets consisted of stock or securities in controlled corporations that actively conduct trades or businesses. That standard has now been replaced with a generally easier test, the separate affiliated group test, as of distributions made after May 17, 2006, which changed 355B3. To determine whether a corporation will be considered to be engaged in an active trade or business, one looks at the corporation's entire separate affiliated group and treats that entire group as one corporation. In other words, a corporation will be treated as engaging in the active conduct of a trade or business if its separate affiliated group, in other words, at least one corporation that is a member of that group, engages in the active conduct of a trade or business. What is a separate affiliated group? Well, a separate affiliated group is a hypothetical group determined by one, looking at the stock requirements of Section 1504A, two, ignoring the list of corporations excluded by Section 1504B, and three, treating the corporation you are measuring, in other words, the corporation for which you are trying to determine whether it has a trade or business, treating that corporation as the common parent. Here, P's separate affiliated group would include P&T, and that group operates the widget business, and so P is deemed to operate the widget business, and therefore it satisfies Section 355B2A. Question 1D, illustrated on the slide. Suppose instead that P owns 100% of three subsidiaries, S1, S2, and S3. S1 owns cash, marketable stocks, and bonds with a fair market value of 70. S2 owns the widget business with a fair market value of 50. S3 owns the cog business with a fair market value of 200. P has no other assets. P distributes the stock of S3. Would this change your answer? Well, the same analysis applied in question 1C applies here. P is considered to engage in a trade or business by virtue of being the common parent of a separate affiliated group that engages in a trade or business through T. In this instance, the difference introduced by the change in measuring indirect conduct of a trade or business makes a difference. Under the old rule, P would not be considered to actively conduct a trade or business, either directly or indirectly. Also note that while P satisfies the active trade or business requirement here in 1D, there may be other issues with the device clause. This discussion thus far leaves unanswered the question of what is an active trade or business. Regulation 1.355-3B2 addresses this question. A trade or business consists of a specific existing group of activities carried on for the purpose of earning money, including every operation which forms a part of the earning process, including the collection of money. The term trade or business does not include either investment activities or the owning and renting of real or personal property in a business unless the owner performs significant services. The alternatives of question 2, based on the regulations, provide further guidance as to what constitutes an active trade or business. In question 2, an individual owns 100% of P Corp. P Corp owns one active business as indicated below. In each case, part of this new business part of this one business is transferred by P to a newly formed corporation, NewCo, in exchange for 100% of NewCo's stock. P then distributes the NewCo stock to A. In each case, please indicate whether both P and NewCo have active trades or businesses after the transaction. In question 2A, P is engaged in the manufacture of soap. The assets that P transfers to NewCo consist of investment securities. Clearly, there is no active trade or business in NewCo. Investment activities do not constitute a trade or business. This is indeed the most obvious example of what the active trade or business requirement was meant to prevent. In question 2B, P is engaged in the banking business. The asset transferred by P to NewCo is a two-story building, 75% of which is occupied by the bank, which will continue to occupy the same space. There is not and will not be a separate employee to manage or care for the building. Well, this is very similar to 2A. The holding of the real estate here is a relatively passive investment. Therefore, NewCo will not be considered to be engaged in the conduct of an active trade or business. In 2C, same as B, except the building transferred to NewCo has 10 floors, only one of which is occupied by the bank. The remaining floors are rented to various unrelated tenants. The bank currently has a managing agent for the building, and this employee will become an employee of NewCo. Well, this change in facts makes a difference. The presence of substantial outside tenants is evidence that the activities of the real estate operation are sufficient to constitute an active trade or business. This conclusion is more clearly indicated by the need for a separate managing agent and employee. Therefore, this would be considered an active trade or business. In 2D, P is engaged in the retail clothing business. P currently has two stores. One is downtown and one is in the suburbs. The downtown store has been operated for 20 years, while the suburban store has been operated for 3 years. P has a warehouse and trucks to service these businesses. The transfer to NewCo consists of the suburban store, the fixtures of this store, the inventory of this store, an adequate number of trucks, the receivables of the suburban store, and a share of the payables. P retains the warehouse, and NewCo will rent warehouse space from an independent party. Well, what we have here is both corporations will be considered to be in the conduct of an active trade or business. Note that this transaction represents a division of a single trade or business. The different geographical sites are ignored in determining a separate trade or business. And here, common types of goods sold by both stores signifies a single business before the separation. This is important here because the suburban store was opened only 3 years ago. And yet, because the two subsequent businesses are considered split from a single business, each will be considered to have been conducted for the entire period that the entire business was conducted, 20 years. And so again, that is important here. In 2E, P is in the construction business. P currently has 2 ongoing construction contracts. The assets transferred to NewCo consist of one of the contracts along with the equipment and employees dedicated for this construction. P also transfers some of the administrative assets and employees to NewCo. This is your typical vertical division of a single business. Both corporations will be considered engaged in the active conduct of a trade or business. Some other requirements are set forth in Section 355B. 355B2B requires a trade or business to be conducted for 5 years in order to be considered active. Now, why this basic requirement that the business be conducted for 5 years? The theory is that Section 355 is designed to allow for the division of long-standing businesses. From another perspective, without this requirement, a corporation could invest idle cash in a new business and distribute that new business tax-free as long as it was in corporate solution, a result not intended by Congress for Section 355. Section 355B2C indicates that the business could not have been purchased in a taxable transaction in the last 5 years. So even if the trade or business has been actively conducted for more than 5 years, if it was purchased within this period, it will not be considered an active trade or business. Taxable transaction for this purpose is a transaction other than one in which no gain or loss is recognized and the asset bases are carryover in whole or in part. Section 355B2D provides that a business will not be active if control of a corporation owning that business was acquired in a taxable transaction within the last 5 years. Let's look at question 3, which is illustrated in a diagram on this slide. A and B, two individuals, each own 50% of PCO. P owns 100% of S. P has been actively conducting its widget business for the last 7 years. S has actively conducted its COG business for the last 10 years. P acquired S 4 years ago for cash. P now distributes S. What result? In question 3A, A and B, two individuals, each own 50% of PCO. P owns 100% of S. P has been actively conducting its widget business for the last 7 years. S has actively conducted its COG business for the last 10 years. P acquired S 4 years ago for cash. P now distributes S. What result? Well, this will not qualify as a division. S is not considered to have conducted an active trade or business because control of S was acquired in a taxable transaction within the last 5 years. In 3B, suppose instead that P is a holding company and that a second subsidiary of P, S1, conducts the widget business. S liquidates into P, and P then distributes S1 to A and B. Well, same answer, same authority. Section 355B2D indicates that a trade or business will not be considered active if the corporation conducting it was acquired in a taxable transaction. This is true even though S actually conducted the trade or business for 10 years. And so P is not considered to have an active trade or business. It doesn't directly own an active trade or business because of Section 355B2D, and so 355A1C is not directly met. And it doesn't indirectly engage in the active conduct of a trade or business, and so Section 355A1C is not indirectly satisfied. In question 3C, suppose that in A and B, P bought S 4 years ago, solely for P voting stock. Would this change your answer? Well, what is this transaction where P acquires S? This, as you'll recall, is a B reorganization, a transaction in which gain or loss is not recognized in whole or in part. And so Section 355B2D II applies, and the corporation will not be considered purchased, and consequently the trade or business will not be considered purchased. The time that S previously ran the business is tacked on to the 4 years while S was owned by P, and so S is considered to be engaged in an active trade or business. Therefore, both a distribution, as in prior question 1A, or a liquidation, as in prior question 1B, would qualify under Section 355. Note that while Section 355A1C is satisfied, other issues might arise in regard to this transaction, which we will come back to.